This is our new programme here on Dukascopy TV, Targets in Focus. Every week we'll be getting the latest currency projections from top banks across the globe. And today I'm joined by Sphere Holbeck from Danske Bank. Hello Sphere, let's start with the traders' favourite pair, the euro-dollar. What do you see happening in the short, mid and long term?
We look for a euro-dollar to reach 142 in 1 month and then rising on to 148 in 3 months and 136 in 12 months. Basically, the reasoning is that even though we see heightened uncertainty at the moment, of course, due to the debt crisis in the Eurozone peripheral countries, we still look for the ECB to progress normalizing monetary policy. And that's really the key reason why we still see upside for euro-dollar going forward. It's our view that the ECB does not like the repo rates at the current, to have that at the current low levels, and that they will use the current window of elevated inflation to normalize monetary policy and quite possibly delivering the next hike in October month. That should then cause relative rates to resume the driving role of euro-dollar. We've had the Fed, the FOMC minutes out last night, and they pointed to the Fed being very much on hold. So from a relative rates perspective, there should be more euro-dollar upside ahead. There are also, adding to that, is also that positioning is fairly neutral in euro-dollar following the recent sell-off, so it leaves further room for euro longs to be built up. Of course, there are some significant near-term risks in terms of the debt crisis, and we look to Friday's stress test results as being a major event risk in the near term.
And moving on to the euro sterling then, what's the situation there?
For euro sterling, we look for the pair to reach 0.89 in 1 month and then 0.92 in 3 months and 0.86 in 12 months. Basically, we look for relative monetary policy also to be the key driver of euro sterling. There are near-term risks in terms of the debt crisis. We do, however, look for the ECB to continue hiking in October, whereas the Bank of England is likely to stay put for the remainder of 2011 and quite possibly delivering the first hike in February 2012. At the moment, interest rate markets price ECB hikes quite softly, and therefore there should be some further euro support stemming from a further normalization of the repo rate in the eurozone. We also think there are other factors supporting the euro. We look for the US dollar to weaken going forward. We also look for a pickup in global demand. That has not been the picture recently from global leading indicators, but we do see some signs of stabilization nevertheless. We think that there are some positive signs out of China, and even though we may see that leading indicators decline somewhat more in the US and Europe, we should see the Chinese PMI starting to rise soon, and that should then bode well for economic growth in the second half of 2011. So there are several factors also pointing to higher levels in euro sterling in our view. We continue to see the pair peak out at 0.92 in 3 months. Beyond that horizon, we have to say that the sterling is very much undervalued, and we expect some degree of normalization once we look beyond the 3-month horizon and look to our 12-month forecast. So there we look for the pair to reach 0.86.
And lastly, what is the euro Swissy up to at the moment?
Euro Swissy, we have penciled in some normalization of the current elevated risk on Eurozone peripheral debt markets. So we look for Euro Swissy to trade slightly higher, reaching 119 in 1 month and 122 in 3 months and 124 in 12 months. I think it's important to stress that even though we look for euro sterling to trade higher, we still look for it to remain at fairly undervalued levels. We still expect the Swiss franc to remain strong. Basically, a weakening of the Swiss franc would give the SNB some room to normalize rates, possibly delivering a hike in September or December, and therefore we might even see a situation where the SNB is likely to provide a floor underneath the Swiss franc. We don't see any signs at the moment that the SNB will engage in intervention to keep the Swiss franc from appreciating. But in case we do see some normalization of the pressure, of the upward pressure on the Swiss franc, we are likely to see that countered by tighter monetary conditions in Switzerland. And from that perspective, we don't think that there should be a large move higher in Euro Swissy, even if we see some normalization of the risk priced on Eurozone peripheral debt markets.
Thank you, Spear. If you want more currency projections to keep you well informed on the FX markets, then stay tuned to Dukascopy TV. Goodbye for now.